Achieving financial success takes dedication, discipline, and most importantly, a plan. For over 30 years, Don Reynolds has helped savers define their needs, formulate their plans, and achieve their goals. From accumulation to preservation and protection, and through the income distribution phase in retirement, implementing the right strategies makes all the difference. Your retirement is our business. Welcome to Strategic Asset Preservation.
Well, hello, everybody, and welcome to another episode of Reynolds Draft. Of course, I'm Don Reynolds. And
Corey's still here with Don.
Yeah. Business partner, great friend. So today we're going to talk about life insurance. I think there's a lot of misconceptions about life insurance, and we hear that a lot when we talk with people. When we're young, we need life insurance because, as we're building our lives, I guess the best way I can put it. You buy a home, you got a big fat mortgage, and as breadwinners, if something happens to one of them, that could leave the family in a very vulnerable situation. So, either term or permanent insurance. I've never been a big fan of term. When you look at what the payouts are on term policies, last time I looked it up, it was about 1% people actually collect. But I understand it's way more affordable too. So, you got to weigh that. Permanent insurance, it's the key word there, it's permanent, so it'll last forever. And there's other values with that because of cash values that build. We actually do, if you will, tax planning with life insurance for clients. So wealthy people, that's one of the tools they use to fund, to create tax-free income later on in life, because you can take loans against it, which are tax-free.
Yeah. If you're phased out with Roth contribution limits, depending upon your income levels, that's perhaps a good way to look at that. And in fact, we used to call them a LIRP, L-I-R-P, Life Insurance Retirement Plan. So it's an excellent way to prepare for a tax-free income source in retirement. And again, if you're phased out with Roth or you don't have a Roth IRA with some tax-free dollars in your retirement plan, it can be an excellent way, an option to look at. And I think a lot of people that perhaps are looking at income in retirement and wanting that tax-free retirement sometimes have to be in, or sometimes are in the later stages of life, and they think life insurance is out of the question because they're too old. I'm past 40, I'm past 50. Life insurance would be very expensive. I think Don can elaborate here on the new mortality tables in just a minute. And the cost of life insurance has come down because of our longevity and people living longer. So you'd be amazed to look at what the cost really is of a life insurance plan, regardless of your age, as long as you don't have any significant health history and can get past the test or the questions there. Once you've got that qualification, I think you'd be very surprised at the cost and perhaps a plan that could work into your retirement planning.
Yeah, for sure. In fact, there's many folks who have come to our office who have existing life insurance contracts. They've been paying into them for years and years, and they've built up cash value.
Yep.
And there's been many instances where we've been able to, if you will, convert those. And what we mean is 1035, it's a tax-free exchange to a new life insurance policy. And because those old contracts, using the old mortality and expense tables, the 1980s, maybe 1990, 2000, people were not living like they are today. So the costs were much higher for death benefits back then than they are today.
Correct.
And by having the higher, or I should say the lower mortality cost of newer contracts today, people can literally move those contracts and maybe even keep the same death benefit, but they have a much more competitive product today. A lot of those contracts, when they were written, people were, showing that, interest rates were at 8, 9, 10% way back then. And now, because of the low interest rate environment that we just went through, those rates dropped all the way down to 3%. And so what's happening is they're not really sustainable. And when we have people come in, and we'll have them call their company, and we'll have them run a current what's the word I'm looking for?
Enforced ledger?
An enforced ledger, I guess is the right way to put it. I was trying to come up with a simpler word for people to understand, but it basically shows how long the contract will stay enforced based on current interest rates. And surprisingly, a lot of these people will see that their policy is going to run out at 75, maybe 80 years old. And it's a shock to them. They had no idea that that could even happen.
Correct.
And so in some cases, we're able to move those into a guaranteed contract, which protects the death benefit. They never have to pay another premium. It's guaranteed through age 120.
Yep.
So again, there's a lot of variables with those.
Yeah. I mean, I guess the bottom line is life insurance is an asset classification. It's a tool to look at in your financial realm, regardless of what age you are at. Again, as Don mentioned, whether you're young, starting off life with debt protection needed for a mortgage, whether it be kids are starting to come into your family. And you want to have some protection there as an income replacement if something were to happen, or later on in your years if you want it for legacy planning or income planning in retirement. Again, that tax-free income. I think the key with life insurance is to just not put it by the wayside, but to have a good conversation with a financial professional and make sure that you look at your current situation. Any policies you do have, do an MRI or a deep dive into what you currently have. Is there something that is out there that you could potentially get into that is better at this time because of the new mortality tables and whatnot? So again, I think the key with life insurance is look at what stage you are and make sure you understand. Quick story might be, early on, mid-20s, early 30s, you're getting married, you've got, a house and maybe kids in your future. Maybe you do a blend of permanent with some debt protection of term, because your debt will descend, hopefully, as you move on in life. So the term can go away after 20, 30 years. And then the permanent would take over. So maybe in your middle years or getting towards the distribution phase, now you're focusing more on that permanent insurance, maybe using it for legacy planning or income planning, retirement. So
yeah, and just to add a link to that too, good points, Kurt.
Yeah.
But another thing with life insurance, a lot of people look at a 529 plan for college. Okay.
Yeah.
And that's not a bad plan at all. Don't get me wrong on that. But if your children don't go to college, now we know that the rules have changed in that you can roll those into a Roth IRA.
Yep.
So, it does help in that regard. So that may be a more advantageous. But if you're looking at a way to fund college, because you're uncertain if the kids will go to college, you could use life insurance, because again, you can take loans against that. And if it's funded properly and set up properly, you never have to pay those loans back. And if the kids don't go to college, well, then you just have more dollars sitting there for tax-free income. And, we ain't going to get into that, but as you all know, that can be helpful when it comes to Social Security planning, for taxes in retirement. If you have no taxable income, Social Security will be tax-free to you, and that's a big deal. We've talked a lot about that in the past.
Yeah.
But the bottom line is, if you have questions, or if you do have life insurance policies and you're uncertain about, is it going to, sustain itself for the rest of your life? We're happy to do that. No cost, no obligation. We'll sit down with you. We can call your company. We can get an in-force ledger. And so we're happy to do that for anybody who's concerned or has thoughts about this. And what it would look like. Please give us a call at 651-773-3859. Again, that's 651-773-3859.
One thing I'll add is a little tidbit, I guess, sneak peek at our next show is life insurance could also potentially be used for long-term care now with some hybrid policies. So pay attention for the next show as we talk about long-term care.
Oh, exactly. Good point.
Yeah.
Well, great to see everybody. Hope you're enjoying the show, and we'll see you all next time.
Have a great day, folks.
Thank you.
Listen to more with Don Reynolds and Corey Stilp on the Strategic Asset Preservation Podcast by visiting 800preserve.com.
The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Advisory services offered through Brookstone Capital Management, a registered investment advisor.